As for Lyft, the company's being sued by a group of investors over its IPO. The suit claims that Lyft misled investors about its market position and labor matters. Leslie Picker's with us to break down these issues on these newly public companies that they're facing. Leslie, this news does not stop.
It does not stop, and one would, expect that the stock prices for these two companies will continue to react to the news as it trickles out. In terms of the investors and derailing the Uber IPO, it's difficult to see how two investors could kind of single-handedly have an impact on an IPO. But I would say the key takeaway from that reporting, from that story, is this idea that as unicorns continue to take mutual fund money privately, pre-IPO, they're going to continue to run into these issues where when it comes time to sell billions of dollars worth of stock in an IPO, a typical resource for doing so is going to already be tapped out because they've already gotten too much economic exposure. In the private markets, they're not going to potentially be as willing to build up that economic exposure in the public markets as well. Interestingly, too, with Lyft's lawsuit that was recently filed, it was a class action lawsuit led by one investor who actually only purchased about $3,600 worth of Lyft stock. But it's common to see in these IPOs that when the share price declines, especially right out of the gate or a couple days later in the case of Lyft, that you will tend to see a lot of these lawsuits circulating in terms of going after these companies and trying to recoup some of those losses you may have gotten by investing in that IPO.
Are there systemic lessons here, Leslie, or are both of these stories so hyper-specific?
I think there are. I mean, in terms of Uber, I think you really have to be careful. If you're a company raising money privately and you go to the T. Rowe's, the BlackRocks, the Wellingtons of the world, which has become ever more common, especially as companies stay private longer, you have to think carefully about whether you want to tap that resource for money or maybe go to other traditional kind of venture capital or late stage private sources of money, because that way you are reserving those sources of capital for a potential IPO if that's the route you want to get to. I think this is a key lesson for unicorns as they go about raising money privately, that they may not be able to go back to the same wells that they were in the private markets and expect them to help support that stock post IPO.